Welcome, everyone. Thank you so much for joining today's webinar, where we're going to be talking about powering up your self-directed IRA with renewable energy. I'm Renika Lightborn with Advanta IRA, and I'm really delighted today to be joined by two special guests, Mr. Christian Catron and Christian Warren of Redeem Investments. Welcome, guys. How are you?
Doing well, Renika. Thanks for having us on. We really appreciate it. Very excited to be here.
Absolutely. We're happy to have you.
Thank you so much.
Our pleasure. So Christian, they're going to talk about how investing in renewable energy infrastructure can produce predictable and passive income in your retirement account. But before I turn it over, I do want to just give you a high-level summary of what self-directing is. If you do have questions as we go, feel free to type those in the question box. We will allocate some time at the very end to get those answered for you. And let's move along. Again, my name is Renika Lightborn. I'm one of the business development specialists with Advanta. I've been an employee here for about since 2019, but I'm also a client of Advanta for about 4 years. So self-directing is something that I actively do. If you want to do a deeper dive, talk through your exact scenario, don't hesitate to give me a call, send me an email, and also to visit our website at advantaira.com. It's a great resource for you. So just a little housekeeping before we get going. At Advanta, we don't give any tax, legal, or investment advice. Just know all of the information that's presented on today's webinar is educational purposes only. So as always, we encourage you to do your due diligence, confer with your professional teams before making any investments. 3 key quick takeaways. First and foremost, know that any IRA or former employer plan qualifies to be self-directed. 2, you choose the investment that works best for you. So again, today we're talking about renewable energy. So if sustainable type investments is something that's near and dear to you, you can replicate those efforts in your retirement account. And then finally, knowing that any income generated from the investment must flow back into the IRA. If there's any expense associated with that investment, it would be paid out of the IRA account. A little history about Advanta and who we are. We've been in business for nearly 20 years and take great pride as being one of the leading self-directed IRA administrators in the business. Our headquarters is in Largo, Florida, which is the general Tampa Bay area, but Advanta is also in Atlanta, in the Atlanta office. But we do work with clients nationwide, as we have nearly $2 billion under our administration. If you do have an account with us and any uninvested cash that's sitting, just know that it is FDIC insured. One of the ways that we separate ourselves from our competitors at Advanta is, providing our clients that personalized approach, meaning you have a dedicated account manager that's going to be with you for the life of your account with us. And then, of course, different educational content that features experts and experts like Mr. Christian Catron and Christian Warren on today's webinar. Speaking of webinars, we have events on a weekly basis, so check out our events page, advantaira.com. Different upcoming events that we do. I have a webinar next week actually with Ms. Camilla Jeff talking about steady stream investments. Also too, we have the Pitch Promote Prosper. It's almost like a has-in-one type online. It's open to the general public, so we encourage you to check it out. All of our webinars are recorded, so you can always access that on our on-demand YouTube learning channel. And then of course our blog has great content relating to the latest industry news and trends. So exactly what is a self-directed IRA? A self-directed IRA in its simplest form just means that you as the account owner have complete control over your retirement funds, you have complete control over the investment decisions, and nothing happens until you say it does. And then it gives you the option to really diversify your account. When it comes to self-directing, there's really a long list of different things that you can choose to invest in, which includes renewables that we're going to talk about. But you can also use IRA funds to invest in the likes of real estate. So whether it's a fix and flip project or a buy and hold or a multifamily unit, you can certainly use IRA funds to invest in tax liens, notes and mortgages, private equities, cryptocurrencies. We've seen a lot of inquiries about that recently. But you can use IRA funds to also invest in oil and gas and so much more. So why do people choose to self-direct? You can look to self-direct for many different reasons. I'll just touch on 3 of them. One, it's a new source of capital for you. So if you have funds that's just sitting idly in an old 401k from a previous employer, you can elect to roll those funds over so you don't have to take out a personal loan or tap into your savings. 2, the stock market. No one really has control over the ups and downs, the volatility. Whereas with self-directing, you can kind of diversify and put your funds to work in tangible assets or alternatives to the stock market. And then, of course, the tax benefits, having those rents, those profits flow back into your retirement account, tax-free or tax-deferred, depending on the type of account that you have. In terms of the different types of accounts that can be self-directed, for individuals, IRAs like traditional IRAs, a Roth IRA. A traditional is tax-deferred, meaning you get the tax break now, you pay taxes later. When you take it out at retirement at 59, with the Roth, you will have to pay taxes today, but when you take it out at retirement, those distributions is tax-free. If you have a small business, a side business, you're a self-employed entrepreneur, you can certainly look to self-direct a SEP, simple or solo 401k. A lot of clients are specifically interested in solo 401ks because you have a little bit more flexibility in terms of higher contribution limits and so forth. I'm happy to do a more detailed conversation with you relating to solo 401ks. You can self-direct an ESA to cover education-related expenses for your children. Certainly HSAs for medical-related expenses. HSAs is depending on having a high deductible plan. So I know it's open enrollment season right now, so something to consider if you're looking to do an HSA. And then, of course, any former employer plan, whether it's an old 401k, 403b, or TSP type plan, those can be self-directed. The only thing to be mindful of is if it's a current employer plan and you're not 59 and a half, most times that employer would restrict you from moving it. You can certainly inquire to see if they'll make an exception to allow you to do an in-service movement of those funds. But normally, if it's current employer, you're not 59 and a half, they'll tell you no. If it's a former employer plan, you can move it at any time, and we'll be able to help you with that part of the process in terms of the instructions to do so. But the key thing to remember here is the different contribution level varies between the different account types. And then with the Roth, as long as you've had the account for at least 5 years and you're 59 and a half, the retirement age, when you take those funds out, it's tax-free. In terms of getting started, we've really simplified that for you in 3 simple steps. We'll be there to walk you throughout that process. But our IRA, you can complete the application, electronically, via DocuSign or online or at a website. But we'll be there to walk you through it. You will have an assigned account manager every step of the way. So step 1 is completing the paperwork to open up your account. Step 2 is funding your account, and you have several ways you can do that. If you have an old 401k or former employer plan, you can do a direct rollover of those funds. You would initiate that request in terms of having the funds move over into your account with Advanta. Step 2, or the second option is if you have an existing IRA at a brokerage firm or your bank, you can certainly elect to move as much or as little as you want to or need to make that investment. In that scenario, Advanta will actually submit that request on your behalf. And then the other way you can fund your account or use a combination is making an annual cash contribution. And then finally, step 3, start investing. What is it that you're interested in? Is it, again, a renewable source that Christian's going to cover later today, or a type of renewable fund, or is it, real estate related base? So that's the 3 simple steps. With that, I'll go ahead and turn it over to our speaker.
Thank you, Ms. Renika. Really, really appreciate the introduction. Thank you so much to you and to Advanta IRA for having myself and my developer partner, Christian Warren, on the line today. We're extremely excited to share with you things that are going on within the renewable energy industry, as well as how we are positioning ourselves to be able to participate in that for a lot of different reasons, some of them altruistic, but as well as economic. And so really great to be able to engage with your audience and giving us this platform to do exactly that. My name is Christian Catron. I'm the president and CEO of Redeem Investments. We're a real estate investment firm that specializes in really 2 food groups within commercial real estate. Firstly, we acquire value add existing apartment buildings and renovate those and bring them up to market rate. And that is really a significant line of business for us. Second only to that is land development, but specifically for renewable energy projects such as solar. And so that's what we're talking about today. The title of our presentation is Riding the Green Wave. That's sort of a double meaning in that, green being obviously renewable energy, but then also some of the economics and the upside from a financial standpoint that investors have to gain by participating in this and investing in this category. So with that, let me go to the Next slide. Of course, the obligatory disclaimer is in here. Effectively, this is simply saying what Renika has stated, which is that the information we're providing is for informational purposes only. There are forward-looking statements in here, particularly in the appendix section where we've included specifics about our fund. And so with that, this is part of the disclaimer that we're required to provide. As far as the agenda for today, we'll talk about the opportunity within the space. As I mentioned, we'll provide an investment example, which, full disclosure, is a summary of our fund and specifics there. We'll then have an opportunity to hear from my partner here, Christian Warren, to talk about the things that they do at his company, Midflare, and then we'll look to summarize it and have some questions on the back end. As far as the opportunity is concerned, really there's a lot of things going on in the energy sector, specifically with renewable energy over the last recent time here. I mean, the solar industry has grown almost 50% with almost 20 gigawatts of capacity just in 2022. I've heard another statistic that said that the most amount of solar farms had been built in 2022 to date, and that amount is set to double by 2030. There's so many other stats that talk about the amount of growth and all the things that are happening in this space. Some of the things that we'll identify for you is who the customers are, who the off-takers, if you will, that are desiring to consume renewable energy, and it's large corporations, it's universities, tech firms, really almost any type of business or institution that exists, and we'll provide you with the list here and we'll share that. Many of these organizations now have what's called ESG goals, so environmental, social, governance goals, that they're either mandated or have a desire, and I don't think it's sort of a fad or a trend that's occurring, but simply something that they are aspiring to have in place as part of the way that they do business. And so we in the space have an opportunity to leverage that desire. Now, that said, there are some mandates, either legislative or executive, that are occurring across across the country. Some states more so than in others, where the states themselves are mandating the movement to a clean energy platform or a clean electricity platform within their state by a certain time period. Many of those are by 2050 to be in alignment with the national goal that the current administration has put out to be net zero carbon emission by 2050. And so a lot of these things, when you look at them in combination, just really speak to the activity and literally the energy that's happening inside this space, if I can use that as a pun. As it relates to solar farms and why we're pursuing solar, I think firstly, let me just say that I don't think it's any mystery that our little blue speck out in the universe can only produce so much stuff. And at some point that's gonna run out. And so when you look at different sources of energy, the sun clearly is one that is a viable and long-term resource that we can use. So the fact that it's renewable is clearly one of those reasons. The fact that there's no harmful emissions that are released into the air, and now increasingly over the course of time here, the cost of producing solar and operating solar has begun to decline at a significant rate, such that it's highly competitive with some of these that you see on the bottom, and even superior to those as well. The last thing I'll say here is that obviously it is cost effective. Again, doesn't require fuel. Once it's installed, it's there. The useful life of the panels is over decades of time, and the maintenance of them is comparatively low versus other renewable energy sources. As far as things that are happening across the board as well, when you look at biofuels and wind and solar, if you look back to the early 2000s, you can see here solar really wasn't a major player at all. Wind was starting to be. Over the course of the last 20 years here, you can see just the exponential growth of solar. Wind has also continued to increase. And so, we do anticipate that solar will continue to increase at a rapid rate and virtually overtake the other forms of renewable energy here over the course of time. With that comes other opportunities as well, specifically for our fund to be able to help and assist in terms of developers like Midflare, who you'll hear from here in a moment, but even things such as energy storage. It's one thing to produce the energy, but if it's not all consumed, it's got to go somewhere, otherwise it sort of dissipates. And so having energy storage available is clearly another opportunity that is available. There's land acquisition, interconnection. Wind is also something that we're willing to take a look at, but a lot of different opportunities within this space by way of our participation in it at this point. I mentioned earlier off-takers. So these are customers that Christian over at Midflare and other developers are pursuing, whether they're government or non-government. Some of these overlap both. Utility companies are largely potentially the largest customers for the developers that produce these solar farms. Clearly, military installations, all the ones that you see here, where there's just a large amount of consumption of electricity that would take place. These are all viable customers to be targeting, and really, I can't think of many organizations or institutions that would not fall under one of these two as we bifurcate the off-taker opportunity. As far as where opportunities are, there are different in each of the different states across the country. The utilities companies have various programs. Some of those programs are more favorable than others from the standpoint of the cost to build them out, but then also the price at which they can be sold to the utility companies. The ones in the states that we're choosing to participate in alongside Midflare are the ones that are listed here, in part because of the relationship that Midflare currently has, as well as the fact that the programs that are in place in these states are the ones that tend to be more favorable, and premiums are being provided for the solar farms that are being built out. The developer partner, Midflare, that I mentioned, who will come on in a moment, just a little bit of background on them. As you can see here, they are MBE certified. They produce anywhere between 10 to 500 megawatts. More of that as of late has been really utility scale. Over $1 billion in development that they've been involved with, and really a good amount of experience between Christian, his COO, and their team. As far as an example, this is just a couple of slides from our fund that we have. It's called Redeem Ref 1. Ref stands for Renewable Energy Fund 1. The highlights is what I'll point out here. The way that we've structured our fund is that it provides a 12% annual yield. So it functions much like an income fund, where you're getting monthly distributions that are predictable. It's fixed and passive. The one of the things I really like about it is, and I think Christian will speak to this, but this effectively is a low risk investment as compared to its yield. I would argue, and folks who know and understand this space would agree that the risk associated with these types of investments, given that they're backed by power purchase agreements and the purchase and sale agreement with the utility companies that are highly rated from a credit worthiness standpoint, really rival the 10-year treasury, which I didn't look today what it was trading at, but 1.25 is sort of what I have seen as of late. It may be lower than that at this point, but our fund effectively provides 10 times that amount, although it has comparable risk to that. The fact that we're investing in renewable energy infrastructure is sort of the main kind of the headline here. I think the two bottom points is especially important from the standpoint of, as I mentioned earlier, various off-takers and customers having ESG goals. The fact that we're supporting, an MBE certified developer in mid-flare, who in turn is producing utility scale solar farms for off-takers such as HBCUs and other disadvantaged institutions is really a fascinating component of our fund. And then lastly, the thing that I'll mention as well is that within the solar industry sector, the representation for diversity and veterans is really very low. You see what the numbers are there. 7.6% of the workforce is Black, 7.8 are veterans, and so our fund is minority owned and operated. And again, by participating in this space, we're able to affect and impact that ratio or that statistic there. So excited about that. Our investment strategy is unapologetically simple and straightforward. Point number one, we partner with developers like Midflare who are highly experienced and have a robust pipeline. Step two, we provide debt financing to them. You see what the interest rate here that we charge. And then step three, we get paid interest payments. And from those interest payments, we provide 80%. So 12 out of the 15 points go straight to our investors. And then the amount of capital that we raise, and for our fund here, this first one, it's $6 million, we're able to fund 4 to 5 projects over the course of the life of the fund. So very, very simple and straightforward. As far as from a project timeline standpoint, these projects typically take upwards to 36 months to build out. You see here the different milestones that typically occur, the first of which is the developer obtaining an LOI and getting that executed with an off-taker, followed by the power purchase agreement that is then signed. The next step in the process is obtaining the notice to proceed, in which case the land has been is now under control, interconnection is in place, all the different permitting is completed, and then at that point they're able to break ground and actually start building, and then once the build out is complete, then it's sold to the utility company. This is sort of the overall structure and design as it relates to one particular utility program that Midflare is highly engaged with and has great relationships with that utility in the state there. And so this is just kind of gives you an overview of what that looks like. Again, throughout this entire process, my fund, is providing monthly distributions to our investors. The ideal investor profile. So this is the last one before I transition over to Christian Warren. Really, even though it's I think the design of the fund is really quite simple. It does bear a level of sophistication, I feel, for investors to can understand. Again, as I described earlier, the level of asymmetric return. And what I mean by that is, again, for the level of risk that this type of structure has, the level of return is significantly higher than you would expect. And so, to point that out is something that's very key and important as someone evaluates the type of returns that they're seeking as compared to the level of risk. And in this day and age, when the stock market is producing very high returns, oftentimes the riskiness of that can sort of go out the window, which is really part of the reason why I like the self-directed approach, which I myself am a customer and use for my investing vehicles, because I have more control and can better direct that into vehicle or to investments outside of the market. Understanding sort of the GP and LP fee structure that I mentioned, really as compared to other funds and the low cost of our fees, and then understanding effectively that the capital is locked up for a period of time as it's being utilized for the build out of our projects. I really do think this type of investment is key and ideal for self-directed retirement account investors, in part because of the low risk that it provides, as I mentioned, especially for those who are approaching the retirement age. It does, again, provide above average returns that satisfies investors that have a longer time horizon. And so, with that, let me pause and prepare to hand it over to Christian Warren. Christian, you're up, sir.
All right, thank you, Christian. So let's start by talking a little bit about the Mid-Flare management team. Mid-Flare, as Christian stated earlier, we were established back in 2009, and Mid-Flare is essentially my business partner, Mark Randall, and I. Just giving a little bit of background, starting with education, my business partner, Mark, is an MIT mechanical engineer with his undergrad, and his grad degree from Northwestern's business school is an MBA, which is actually where we met. And my education, I have an undergrad in physics from Morehouse College and went to Georgia Tech, where I got my grad degree in mechanical engineering, and went to Northwestern, where I got my MBA. The importance of that type of educational background is it allows both Mark and I to understand all elements of what happens within renewable deals. So we understand the technical elements, the business elements, the financial elements, et cetera. And when you combine that with our collective over 50 years of experience working in different corporations, I have a lot of logistics background as well as industrial background from General Motors. And as you can see, Mark has a lot of consulting background in addition to his foundation working for large corporations like Honeywell and GE. Next slide. So let's look at the Dominion program that they use for developing their needs for solar. The current program that they have is best described as a three-party collaboration. And the program that we are using, they certainly have others, but the ones that we like the best fit under this umbrella. And in this three-party collaboration, you have a developer, in this case it's Mid-Flare. You've got the utility company, in this case it's Dominion Energy, and we're focused in Virginia. And you've got the customers, and in this example that would be customers like Apple, University of Virginia has used this, Amazon has used this, Facebook has used this program. So we're really just taking advantage of a program that the Virginia State Corporation has implemented. And Christian mentioned earlier that there's a lot of incentives for these different utilities to try to implement as much solar as possible. And in the case of Virginia, they did pass the Virginia Clean Economy Act back in 2020. And that is one of the programs that does have a goal by the year 2020 to have, by the year 2050, to have 100% of the energy used within the state generated from renewable resources. And solar is going to have a major role in that. Next slide, please. So looking at the current projects that we're looking at in Virginia, we've got 3 colleges that we've been working with, as well as what I'll term a large public-private corporation. And this public-private partnership corporation is really interesting, but they are a great opportunity for not only the state, but for the region to get a high-profile company to embrace renewable energy. And just again, we want to stress that this is a program that Mid-Flare as a company has extensive experience with. My business partner, Mark, is in the Southern Virginia area around Norfolk, Hampton Roads area, and we just commissioned a solar farm this past week. So we've gone through the process a few different times, and we're very, very familiar with all of the ins and outs of it. Next slide. So current status, we are very well connected at Virginia State University with the president and the VP of facilities. They have a verbal commitment to move forward with this, and that's allowed us, because of the strength of that relationship, to most likely skip the LOI process, because there's, like, Christian, we're we're here, we can do the LOI, we can jump through the legal hoops if you like, but we're not going anywhere, and we're committed to doing this with you guys. So that's a process that we've moved forward and accelerated quite nicely. There are 2 other colleges that we're in the LOI process with, letter of intent, to be more specific. There's an opportunity to bypass that as well because of the success we've had with Virginia State. And then, as I mentioned, the large public-private partnership will be under LOI in early 2022. So all of these objectives really have a common thread. And the common thread is these companies, these universities have very strong, robust programs to integrate sustainability into their overall operations. And that has benefited us. Next slide. So in terms of project finance needs, we're looking at investment capital of roughly 3.7 million to develop up to 150 megawatts of solar, and the solar farm will be located west of Richmond. And we anticipate that the total project cost for something of this size will be approximately $150 million. So that really starts to speak to some of the points that Christian made earlier, where the installed cost of solar really is pretty attractive, and you can turn it around pretty quickly relative to some of the other options. For those who are based out of Georgia, you may have seen the headlines with Plant Vogtle, and Plant Vogtle is a nuclear power plant that was supposed to cost somewhere around $3 billion. Well, they are right now $7 billion into cost overruns, and they're running over 4 years behind. And the reality is you just don't experience those types of things with solar as well as other renewables, hence the desire for utilities to embrace those generating options. So to really tie things up here, Midflare does have the relationships to finance and cover the construction costs as well as interconnection costs. And then we've got the land acquisition costs are things that we've got the relationships to take care of as well. But Dominion has an excellent program to help put a nice bow on the activities that we're doing, and hence our recent focus on the state of Virginia. Next slide.
Yeah, thanks.
So with that, I'll turn it back to Christian. Thank you.
Thank you, Mr. Warren. You know, before I touch on the items that are listed here, the other thing that I'll say is, and I failed to mention this earlier in my presentation, is that the role that Redeem Investments has in partnership with Midflare in its current state really is one where we're providing debt financing for the soft costs related to these types of construction projects. So things related to the pre-development, site selection, legal, permitting, many of those types of things in advance of them sourcing a construction loan to then begin the build out. That said, our partnership has continued to grow and has strengthened such that we're also assisting in that process of sourcing construction loans and equity financing for things like land acquisition and interconnection costs and other things. So it really is becoming more and more of a beautiful partnership as it grows and evolves and develops. So really excited to be partnered with you there, Christian. As far as summary of the information that we shared, really there's just two main things that kind of encapsulate things. In terms of the industry, I think it was Wayne Gretzky, when asked about how he was able to be so successful, he described how he would skate to where the puck was going as opposed to where it's been. And really that's exactly what we're aiming to do. We have a very clear vision of where the puck is going, and a lot of it is moving towards renewable energy, specifically with solar. The green wave, really, I spoke to that earlier, but I think another way to think of it is just the amount of deal flow that is coming about and that has already been made available, in not only because of the legislative and the executive mandates, as I mentioned. I think, as you saw, there were really only 9 states currently that have something in place like the Clean Economy Act that Christian mentioned, However, businesses, there's industry that's driving the growth and desire with their ESG goals, as I mentioned. And then, of course, the social impact of this, not only from affecting climate change, but then also from the aspect of affecting diversity and inclusive of veterans and things of that nature. As far as the deals itself, again, speaking specifically to the way that we've designed our fund, really just low risk. The loans that we provide to mid-flare are backed by the power purchase agreements that they have in place with the off-takers, as well as the purchase and sale agreements with the utility companies. And so very, very low risk there. Again, the ability to produce higher returns than other options that are available with a comparable risk profile. And I talked through that. And then lastly, the fee structure that we have in place is very, very low as compared to others. So I know that speaks specifically to our fund, and so that's somewhat of a shameless plug. However, I will say that there are so many other opportunities that are being made available in this space that all you really have to do is sort of Google and do a search or engage with your investment advisor at Advanta here to determine what options are available in order to see where you'd like to invest there. So with that, I will pause, and I think, Renika, we can open it up to questions at this point. I do have several other slides should someone ask about, our fund and who it's managed by and who's all involved and things of that nature I can speak to. But these slides can also be made available to you and your audience should someone want to go back over them as well.
Absolutely, great information, guys. And yes, I do have questions coming in. I'll ask those questions, and then of course you feel free to go through the additional slides, just high level. So question is, what are the drivers of solar's ability to produce premium returns given the low profile compared to other industries?
I missed the first part of the question, Renika. Can you repeat it, please?
Yeah, so the question is, what are the drivers of solar's ability to produce premium returns given the low profile compared to other industries?
Yeah, so I think I can really speak primarily to the way that we've designed our fund, and really and it may actually require or provide an opportunity for Christian to weigh in. And the way that we've designed our fund is I've come to an agreement with our developer partner as to the amount of interest that we would be charging for the loans that we're providing. And from those interest payments is where we're providing the return and the yield to our investors. So the question may be, Christian, if I can rephrase the question for you is, what is it that gives you comfort level to provide the level of or to pay the amount of interest that we've agreed to? Is it something about the projects? Is it something about the economics on your end? Anything that you might be able to share as it relates to what gives you sort of comfort in terms of coming to agreement with the cost of capital?
Yeah, absolutely. Really, it falls into one of two areas. The first is looking at utilities as the partner and the purchaser of the projects that mid-flare is focusing on. The plain reality is utilities just aren't good at building solar farms. And that's why they look to developers like mid-flare to build solar farms on their behalf for their state government or federal government mandated needs. So that creates an opportunity, and they're willing to pay a premium for that because they know they're not efficient at doing so. And then the other thing, as it relates to mid-flare, if you will, is we're just exceedingly efficient and good at keeping all of our projects on time and on budget. That's our claim to fame. And again, looking at our experience background and what led us to this point, that's really been part of the DNA of the company. So paying attention to cost, doing it on time, and the fact that utility companies just aren't efficient at doing it creates the opportunity.
Okay. Next question that came in, do you have any plans to invest in Georgia, and what is your minimum investment? So two questions, two-part questions. Do you have any plans to invest in Georgia, and what is the minimum investment?
I'll tackle the first one, or I'm sorry, I'll tackle the second one, and I'll let Christian tackle the first. So this, as it relates to the second one, the design of our current fund has a minimum of $60,000. As it relates to the second question, really, my piece of that is wherever Christian is looking to build out and to seek opportunity is where we're willing to support him. So Christian, do you want to add to that? Is there anything teed up as far as Georgia is concerned at this point in time?
So the short answer is we don't have immediate projects in the pipeline for Georgia, but the more complete answer is we're in active conversations with Southern Company, which is the parent company of Georgia Power, to get a couple of projects going within the next couple of, and I'm just going to say within the next year or two. But it's always a function of the programs that the utility company currently offers.
You might also mention that there's some bias towards working in Georgia, given that's where you're headquartered.
Yeah, absolutely. No harm in staying close to home, if you will.
So next question that came in is Midflare working with any EMCs?
EFC?
EMC, E as in Edward, M as in Mike.
Oh, EMCs. At this point, no, we're not. But predominantly, we've been working with the much larger utility holding companies and companies like the Exelons of the world and the Dominion Energies of the world and Southern Company. But EMCs were 100% open to working with them.
Hey, Christian, for the edification of the greater audience, you want to share what EMC is?
EMCs are essentially, the way I look at it, as they're smaller electricity co-ops that are located throughout different states, and they have a lot more flexibility to do projects that they feel are in their customers' benefit. So they can be wonderful facilitating partners to get solar projects built.
Excellent. I have another two-part question. So how are PPAs structured? So how are power purchase agreements structured? And the second question is the price of solar fixed over the life of the contract or floating?
Christian, I'll go ahead and take that one if you don't mind.
Yes, please, go ahead.
Okay, so power purchase agreements are typically structured with a base rate that is normally somewhat less than what the off-takers are paying currently. And then 90% of the time, there are what's called cost escalators built into that. So there is a defined increase or a slight step up in the rate over time. The length of PPAs typically run a minimum of 10 years and up to 20 years. But all PPAs are individually crafted documents that work in the best way for each of the off-takers.
Okay, next question that came in, you may have to clarify, but the question is, why do your customers pay such high interest rates at 15%? So I think he may be alluding to you saying the payout is.
Yeah, no, that's a great question, and really and I'll have Christian really weigh in on that, and I think that's sort of a follow-up to the earlier question. Christian, is what gives you comfort in paying the level of interest rates for the loans that we've provided, especially in a environment where you're seeing historically low interest rates and potentially being able to source that from other places. What gives you comfort? And then I'll weigh in on the back end.
Well, the desire to have a partner that you can trust from a financial partner standpoint is critically important. And after going through the negotiations, we really saw and understood that the economics of our projects, A, could easily support that, and B, Redeem as a partner brought the liquidity that we were looking for so we could scale and do more projects across time. So offering that type of return attracted the money that we were looking to bring to the table to execute our projects. So really, for lack of a better way of saying it, this is the engineer in me. It was a simple math equation, and 15% was easily sustainable.
Yeah, I think I'll add to that, Christian, by saying that I have colleagues in this space who are providing similar type loans for real estate deals that are charging upwards to 25 to 30%, if you can believe that. Obviously, those ones are higher risk, and so it warrants a significant premium. But I think in this case, given the low risk profile that I mentioned, and the fact that Christian and his developer team are able to sustain the level of interest that had been discussed and agreed to, given the level of premiums that he's receiving on the backside for the sale of these assets and things of that nature. Really, it speaks to what Christian indicated earlier, is that the projects themselves could sustain that. And it was what was warranted for me to satisfy really the level of returns that my investors were seeking.
Okay, great. And another question came in. It's a comment and then followed by a question. So the comment is, the purpose of the fund should be to concentrate resources from a group of small investors to provide a group of investments that diversify risk. And how many different solar developers does your fund invest?
Yeah, no, that's a great question too. So for this first fund, it's really designed to support Mid-Flare's efforts. That said, if Mid-Flare does not have a need for a period of time, or there are other developers, which I have been, and interestingly, Christian has been very helpful as well in terms of determining or helping to vet different developers who may not have sort of the level of attributes and things that I've found in him and his partner. He's been very helpful in that. We are in discussions with other developers who may have needs, and as they do, then we'll simply either increase the size of this fund or produce another fund to be able to help support their efforts as well.
Okay, great. I have another question that came in. Where do you see the biggest growth in the renewable sector?
Yeah, I don't know if they're talking geographically or with regards to the different aspects. I really think if you go back to that graph that I showed earlier, it's pretty clear that solar continues to grow at a rapid rate. I think wind will probably maintain, but then there are other sources or other types of renewables that are being produced and explored as well. And I can't speak to exactly how it will unfold, but I do think there's the shift from fossil fuels is certainly occurring. Christian, anything to add to that?
No, for obvious reasons, I think solar is going to be in the pole position to provide what it needs, what the utilities need, and what folks are looking for from a renewable standpoint. And then geographically speaking, if that was the point of the question, really that's going to be shaped by two things. One, where solar has a good profile of providing good electricity. Obviously, Seattle, with being cloudy all the time, is not quite as good as Arizona. So you would tend to think, Arizona and places like that. And then it depends on the programs that the utility companies have, and that's always evolving and changing.
Okay. Another question for a self-directed investor, what is the typical lifespan, or what is the lifespan for your renewable fund? Is it 5 years, 10 years, 20 years? Can you elaborate?
Yeah, so the fund is designed to be a 7-year fund, and we do have a built-in mechanism within our fund documents that allows an investor to exit after 40 months. Again, these are typically 36-month-long projects. However, should there be a need or a desire to pull funds out of the fund, that is permissible after a 40-month period. Typically, though, again, this is expected to be a 7-year fund, and that will allow us to support multiple projects throughout that time period.
Okay. Two other questions that came in, or two-part question. I guess this was for Christian Morin. What is an integrator and what is an independent power producer?
What is an integrator?
Yes, and what is an independent power producer? Are you familiar with those terms in renewable
Yeah,
energy?
absolutely. Absolutely. An integrator is really just another term that generally applies to developers. So the integrator brings together all of the different parts and parties to execute the construction of a solar farm. So it's land acquisition, bringing together the panel manufacturers, the construction folks, and the engineers, et cetera. And then the second part of the question again, please.
Second, what is an independent power producer, IPP?
So an independent power producer is generally a entity or a person or a business that has the ability to generate their own electricity. Most of the time it's for their own specific use. And one of the industry terms that is applied to that is for behind the meter purposes. So think of it in this way. Think of a company that uses a lot of electricity, that has a lot of land adjacent to their business, and they build a solar farm and they consume all the electricity that solar farm produces. They would be called an independent power producer.
Okay. Another question that came in, if there is a 7-year horizon, what is the exit liquidation strategy?
What is the exit liquidation strategy? So whatever project may be in the midst of being built, the moment that either before or right after a 7-year period, so there's some flexibility in there that again is spoken to in our fund documents. At the conclusion of that project and at the point of repayment of all outstanding loans by our developer, the entirety of the capital to our investors is returned at that time.
Okay, so I had a question that came in. Do these investments qualify for SCIRA even if the Build Back Better bill goes through? So yes, in terms of, there's only 2 investments that you cannot put in your IRA. Life insurance collectibles is straightforward. I know there were some provisions originally in the Build Back Better plan that was trying to take away, or limit your ability to self-select, but in this regard, it doesn't impede your ability to invest in renewable energies, whether it's directly or through a fund. So another question that came up is, what are the limitations of renewable energy?
What are the limitations of renewable energy?
Yes.
Christian, you want to take that and then I can add?
Sure. So limitations would be, let's start with solar. Solar only works while the sun is out. So in the evening, solar is not viable, but that can be mitigated by battery storage options. Wind power is only viable when there's sufficient wind to turn the turbines. So it doesn't have the predictability, if you will, of things like coal-fired or gas-fired power plants, because they work 24/7 in a very predictable way. However, a lot of renewables have been around so long, there's a very predictable amount of electricity that you should get from those generating assets over time. So it's not a wild card, so to speak, but it does have limitations in terms of whether you can use it at night and those types of things.
Yeah, the only thing I would add to that is because of these limitations that you just named, an interest that has grown among us really is with regards to energy storage. And because during times of production, again, if the entirety of that energy that's produced is not consumed, which we wouldn't expect it to be, it's got to be stored somewhere. And depending on the design of these assets, it could be such that excess energy is sold to the grid, for example, if this was an independent power source, as was asked about, or it can then be stored for future use. So yeah, energy storage is certainly something that we've looked at and starting to look at more. And in fact, one of our advisory board members is a CEO of a consulting company that specializes in energy storage.
Okay, great. So that's all the questions that came in. Great questions. Christian, if you want to go through like the remaining slides, just quickly, we have another 5 or 6 minutes or so. And if a question come in, we can certainly interject and ask away.
Sure. I think one of the things is always important to understand is who is it that's behind the fund or any investment. A team matters a great deal. And so I'm just going to show you our mugshots, if you will, of our management team. And so you've got myself, my COO managing partner, Michael Upirio, Corey Henry, and Derek Gilbert. 3 out of 4 here are West Point graduates, veterans of the U.S. Army, extensive experience in corporate and as well as entrepreneurship. Other members of the team include these folks here, and they participate in various roles. We also, like any good and reputable fund, have a third-party fund administrator to handle some of the back office, accounting, audit support, etc. Ours is NAV Consulting, and so when you look at the overall average as compared to the other competitors in the space, they stand above the rest of them, and so we've partnered with them to handle our fund administration. And then I mentioned our advisory board. So these are gentlemen who are highly respected in their own right, CEOs of different companies. 3 out of these are classmates of mine from West Point. One is an MBA classmate of mine, and the other is a little bit more senior than the rest of us, but also a West Point grad, which is Tony at the bottom here. His company actually just went public earlier this year. And so let me pause there in the interest of time and see if any other questions came in.
No other questions at this time. If you have any other slides, feel free to share. If not, I'll put it back on my final slide to close out. Okay,
let me just see if there's anything here. I won't speak to this much. This one might be interesting to some folks who might be interested, and really answers the question that one of the folks asked earlier as to the repayment of the investment or the capital. Really is taking place here in year 7 or thereabouts, depending on the sale of the project that may be in the works at that point in time. So you can see here for a $60,000 investment with an annual yield of 12%, someone would be receiving $7,200 per year over the life of the fund, and the return of their capital taking place in that final year. Won't go through that. And here's some risk factors, some things. Obviously, anytime you're looking at investments, you always want to consider risks. And so here we've outlined different risks and how we go about mitigating them. We do have a gating mechanism whereby the loans that are being requested aren't simply put into an account to be used at the borrower's leisure, but rather there are milestones set in place such that the achievement of those milestones warrant the release of future of the additional draws and so on. The thing that I really like about these that is unlike the real estate space is within real estate right now, depending on the market's great right now, but in other times you may not know what the value of that property might be once you're done fixing it, and in this case, or done building it, and in this case, the value of the utility, the value of the asset to be sold to the utility is predetermined even before the developer breaks ground, which I think is fantastic. And so there's revenue certainty there. And then the last piece I'll speak to in the interest of time is that there are multiple off-ramps, if you will, whereby the developer can sell the project even before the project is fully built out and sold to the utility company. That's sort of the third off-ramp. The first one is after they've secured the PPA, that PPA has significant value and can be sold to another developer or to the utility company itself. The next off-ramp is at the point of NTP, and that increases the value even more and can be sold at that time as well. So multiple ways to exit, I guess, is my point, even before the final exit opportunity. And that is it, Renika. Thank you so much for having us on. We really appreciate it. So excited for us to be able to share this information and available for follow-ups or questions. Please do share this information with the folks that dialed in, and we're happy to answer any more as they come in.
Absolutely. Thank you, gentlemen, once more again for being our speakers today. Great information. I'm sure I'll have follow-up inquiries, and I'm happy to share your PowerPoint slide. For everyone on the call, if you have any questions relating to self-directing, again, feel free to reach out to me. I'm happy to connect with you and talk through your inquiries relating to self-directing as a whole. With that, I'll go ahead and close out the webinar. Happy investment, happy holidays, everyone.